Hello everyone, this is Spectro here, and we're gonna go through our newest update. I'm very happy to announce our Christmas update, the biggest and the best yet, which is Spectro M2. Spectro M2 offers a lot of features. It basically covers everything that technical analysis has to offer. Alright? Spectro is basically it's our all-in-one indicator. Every single indicator, every single feature, every single thing we have, it's packed in this indicator here. The reason I created Spectro is to offer a one-stop solution that doesn't matter what you trade, how you trade, what's your scalper, swing trader, doesn't matter. This will fit you. It has tools and features to combine between each other to form very, very powerful and profitable systems within one indicator, okay? So let's start from the start and let's talk about the Spectro entry and exit, which is our main feature. The Spectro entry and exit, it's yet probably the most important indicator we have, and also the most underused, to not say incorrectly used one. Why? Because the Spectro entry and exit, it's a trigger. It is not meant to be followed like a stupid bot. Every single person that comes to me and say like, oh, I want to buy in every single up and I want to sell in every single down, this is the guy that I know that doesn't really have a lot of future. Why? Because they want something easy. They don't want to listen. Okay? This indicator is a trigger. You gotta know when to pull the trigger. Okay? So what does it mean? It means that you only pull the trigger when you're most likely to get it right. So hey, why do I use this? Well, let's say you get a formation going on, you have a system going on, and you have this trade where you think it's gonna turn out fine. Let's say this trade here. This is a hard one to trade. Why? Because it comes after a huge drop. Every time that a huge drop happens, you're always overexcited to get the top, the bottom, or the top right. Okay, so you have this huge candle here, and then right here you're already, oh my god, that's it. You see, that's not it, bro. You're wrong. This is a better area where you should enter. It's the same thing. In the same way, let's say you're shorting, okay? Good. You have this massive up move and you want to short it. You're waiting for it to short. When I should short? Oh, I don't know. Should be here, should be here, should be there. Here, man. This is safe. Short here. You see, in the same way, oh, I shorted it. Now where? Here. This is a good one. It was a solid move. It's an uptrend. It's following a channel. That's a good one. Why? If it's an uptrend, why are you gonna buy in the upper channel? This is crap. All of those ups are crap. You see, this one, it's crossing up. This is good. I don't like to bounce. Why? Because your odds are too skinny. Your upside, it's sometimes smaller than your downside. Okay? So you gotta know how to when to pull the trigger. Alright? And how do you do that? You do that by using all of our other features. And that's what we're gonna do now. I'm gonna explain it how to follow just the best triggers. Alright? So starting from start, I'm gonna turn on all the Spectro triggering system options, and I'm gonna turn off every single thing that isn't related to Spectro so you can understand what I'm talking about. Okay? So Spectro comes from statistical odds. When the move is too far off the odds, this line goes way too far from the price. And every time you have the odds way too far above or way too far down, they tend to correct. Because it's simply odds. That's how it is. So let's say an accident happens every 2 days. If you're like 10 days without an accident, it means that you're really damn close of suffering an accident. It's just how it is. Those are odds. You cannot change the odds. And that's what Spectro does. It compares tons and tons of past moves, all right? And we use certain proprietary parameters, to compare, oh, this is a good move, this is a bad move. And then we have our formula that gives you, hey, this is too much. Hey, this is too much. All right? So the oscillator will tell you when the move is too exhausted and you should correct. You see, from the moment it got too exhausted, the price kind of stopped. And then when the odds start to go up, the price went up. You see? That's what I want you guys to realize. You go up way too much, then the price compresses. And then it corrects. All right? And this correction is what you should be afraid, because the correction is sometimes not only a correction but a reversal. So using the oscillator will give you the best exit points, even better than the confirmation signals, because those are safer but not faster. Those will give you confirmations, but like everybody, confirmations sacrifice profit. They eliminate risk. You enter in safer areas, but it doesn't give you the best possible prices. If you want to get in the best possible prices, you should use the oscillator. Okay? For the reason I just explained. For instance, we see this drop here. Boom. Goes all the way down. So from here on, the next candle here, you can see it's going up already. So you know that between this candle, which was the very bottom, and this one, it's very likely that the price is only going up. So if you get in at any given time here, the odds are that the price is only gonna go up. It might be, just a fake breakout, but still you're getting in a very good price because the odds are in your favor. And you see, every time you play the odds right, you get it right, man. So the same thing, let's say you want to short this. When the odds are in your favor, which is basically the very top here, the next one you see a very huge drop. If you get in at any given time in between those two, you're golden. And the same thing again. And the same thing again. And the same thing again. All right? That's why the Spectro oscillator is so important, and not a lot of people use it. You see, I'm only using the triggering system by itself with the Spectro oscillator, which is the brain behind the triggering system. Just that by itself already gives you very strong signals. It already tells you, hey, this is a better area than sometimes this area. Oh, but man, it spiked up. How can you say this is not better than this? Because you didn't know it was going to go up like this. The secret about trading is always playing the odds right. Because when you win big. If when you get lucky. But when you get unlucky, you lose very small. And that's the key of consistent winnings. All right? Playing the odds right. So you probably realize that there's the oscillator and the warnings. So the warnings are like this. You see that when the oscillator is green, it's bearish. When it's green, it's bullish. When it's red, it's bearish. But then you have those blue areas. What those mean? Those mean that the trend is kind of without direction. It could go to any direction at any given time. So we give you a warning, a direction change warning. It means that at any given time, since the trend is too weak, it could reverse, or it could spike up, or it could whatever. And as you can see, the warning comes faster than the confirmation, because it's, the warning is like a safe mechanism to let you know, like, hey, be careful. Honestly, if you're using the oscillator, the warning is a little redundant, but if you don't like to use the oscillator, I would say that the warning is pretty damn cool, especially tip if you're using conservative filters, really strong conservative filters. I like to use the warnings. The warnings with conservative filters are great. If you don't understand, so let's say we get this drop here. You never trade what you're seeing. You trade one step ahead. So you always want to find huge moves and you trade against it. So you find this, all right, and you're expecting to hop in the reversal, okay? You see how it's conservative, how it took a little long, First, this is 1 hour, so conservative is not always the best choice. But just for, learning purposes, look how the warning was very good. So if you're trading kind of, like intraday kind of situation, and you're using conservative filters, you might want to use the warnings. Look how it was an amazing entry price. Okay, let's see if we can find something else among those lines. Same thing here, huge drop. When you get in at the up, no, the warning is faster. See, that's basically the situation I'm trying to show you guys. But same thing again here. Look, huge fall, warning. Good increase, warning. Huge fall, warning. All right. Oh, there's a warning here. Yeah, but I'm not seeing a huge increase. You see what I mean? Oh, huge increase, warning. Oh, but it maintained the price. Sure, but it's a great take profit area. Okay. So let's use our other features to further improve our profits and getting better and better signals. I want to be able to introduce you to a system that will let you create the best strategies you ever had. All right. So let's start with the volume analyzer. This is a brand new feature, and volume is one of the best and most powerful indicators there are, and yet a lot of people overlook it or they don't know anything about it. All right. So we decided to make it simple. We added 4 different types of volume analyzing modes. So each mode, it has a slightly different style, but they are all pretty similar from some stuff. From the core mechanism comes from the Spectro oscillator, volume oscillator, which also uses statistical probability, some machine learning to analyze the odds and to give me an output of the model and such, blah blah blah. All right, you don't need to know that, but they all come from the same statistical study that we applied in price that gives us a Spectro. So the volume analyzer is our model for volume. Okay, so I think it's pretty straightforward. Scalping, the scalp mode, I'm gonna go through one by one, but I'm gonna give you an overview first. The scalping mode is the most active. The reactive, I apologize. It's the one who offers the fastest signal, but yet, if you're, trading a longer trend, a longer position, it might not be the best for you. For instance, scalp mode, right? Let's turn the scalp mode so you see what I mean. You have this up movement here, okay? And you're the type of trader that you don't like to trade a lot. You don't like to scalp. You like to hold your positions and, to have very solid take profit rules. So let's say you would sell somewhere here. Doesn't matter. It's just an example. I'm not saying you should. Okay? So why is it hard? Because you get all of those bearish, indicators here from volume, and that can scare the crap out of you, you know? So in this situation, scalping is not the best choice. But if you're trading, let's say, 5 minutes and every single move counts, oh, then you might want to scalp, you know? For instance, like this. This is better. Yet, yes, you have some choppiness, but you see how it reacts faster? Okay, you want a very reactive when you're trading so small time frames, especially if you're using leverage, for instance. Okay, of course, you always have some bad signals like anything else. You gotta tread carefully, but also you have amazingly good signals. And usually volume signals, they're really cool because they trigger before confirmations. Usually, let's say this channel is here, the confirmation would be here. You already got, you know, a bullish signal going on there. All right, let's go to the next one, which is the sine wave mode. The sine wave comes from sine, trigonometry, which means that everything oscillates. Look, this is a sine wave here. So you kind of understand what's going on. So the sine wave comes from the premise that supply and demand always regulate each other in waves. Okay? So without the blah blah blah, right? It seems very fancy, but so you guys can understand, this is more or less how the sine volume oscillator works. So this would be a bearish area, which means supply is bigger than demand, therefore price decreases. Then you have the bullish areas where the supply is smaller than the demand, therefore there are more people buying than selling, price increases. But then you have the transition zones. All right, and from that you already understand the indicator. The transition zones are the orange zones, and the green and the red are the bullish and the bearish. Oh, but here you have a transition zone, and then it goes back to be bearish, right? Right. Why? Because it was in transition, and then it went back down, and then it went to transition, and now it went up. You see? That's how it works. That's how the sine wave module works. It's a more flexible system because it works in pretty much with the same performance across any time frame. And gives you some time to prepare yourself. For instance, you shorted, let's say here, right? It's going down, 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 down. Oh, you get a transition area. Oh, you get positive volume. It means that people are buying more than they're selling. So it means that this thing is going to go up. You know, it means that a reversal is going to happen somewhere here. The same thing happens here. This is a dangerous trade because look, I want to say something, and this is important going over volume. You see, when you have a huge spike in price, but you have an overall bearish volume, it means that in the future, this price is likely to fall. You see? Like this. Let's see if we can. It's a pretty much like a RSI bullish or bearish divergency. You know? Let's see if we can find something else like that. Those are very rare to happen, but when they happen, at least you know what to do. Okay, working on. Another thing that's important about volume is that volume is meant to be read in a context, not only this area. volume has to be taken in consideration as a whole, like a huge chunk of it. And I'm going to explain why. Let's change for the next one and we can talk about it. So the long trend mode, well, you're going to understand what the long trend mode is. Well, that's the long trend. The long trend, it's for you who don't like to trade so much. You're the guy like me that you don't have a lot of time. You like basically invest like 1 hour daily to trade or something. And you want as clean as possible trend and volume analysis. You don't want a lot of hustle. You don't want the maximum profit. No, you just want simple, easy to read information. And that's what you want. You want the long term. The long term can be really, really, really good. Look, for longer trades, it can be great. Just a hint, I think it will happen with this one. I'm not sure. Let's see. TradingView has a bug in some assets. This one doesn't happen. But some assets like future, they have contracts. Therefore, sometimes the volume doesn't work right. Oh, that's working right too. But I'm pretty sure some of them sometimes don't work right. So, what do? Usually, they don't work right on daily, weekly, monthly, So if it bugs for some reason, I think SPY bugs. Let me see. I think no, they're all working. But sometimes TradingView has some weird things going on. What you want to do is just you go to 12 hours, and most of the times, if it's bugging, if you just get it all red or all green, just try different time frames, intraday time frames, and you're gonna get it right. But this is like a TradingView bug that happens sometimes, and this is my tip for you to avoid them. Okay, so going back to the long trend mode, and this is interesting because this is SP 500. So basically, this is the index that is telling that the world's going to hell. And basically the world's going to hell right now. This is officially a recession. Look at this. This is the index that averages the 500 biggest companies in the United States. So this is actually pretty damn bad. And actually forecasted it a long time ago. I remember, around here I was, doing a study that we're gonna see a huge decrease of price. I will link it after. But there you go. What I want you to see, remember that I was telling you that volume has to be seen in context. So you see how most of the volume here is green, and then you start to see a lot of red going on. You see how red starts to become more normal? This means that a reversal is likely to happen in the future. Because this kind of determines, I don't want to get into, very technical discussions, but this kind of means that people are, distribution and accumulation areas. So in a bullish momentum, when you start to see like a lot of bearish volume, and they start to appear more often, and then more often, it, a reversal is gonna pop up really soon. So let's go to 2008. So 2008, you all know what happened in 2008, right? The big crisis. There we go, 2008. Great. 2008. All right, same thing. You see a lot of green, of course, always some red areas, and then you start to see red more often. Boom. Let's get the daily. Daily might give you better insight. 2016, go back to 2008. There you go. Look, perfect. You see how you have a lot of green, then you see how the red starts to be more common around here. This means that even though it's an all-time high and you get a lot of red, this means that people are, this is a distribution zone. There's huge institutional pressure here holding the price down. How come it's an all-time high and the volume is negative? It means there is a huge selling pressure pointing down. Okay? Now the last volume analyzer, which is the precision mode, and it's one of my favorite modes. So the precision mode, it's, well, precise. And how it works, it not only tells you if it's bearish or if it's bullish, but it also tells you how strong that moment is. So the lighter the color is, weakest it is. The darker it is, stronger it is. So let's see this drop here. It's green here, and then you got a light red, and then you have a slightly darker red, and then you get like a really dark red. Boom, here the red starts to change colors again, lighter. And now you have a light green. Oh, this could be an entry point. And now you get a dark, healthy, solid green. Ooh, lighter, dark, lighter, dark. Ooh. You see, that's how you should read it. I really like this. It's the one I use most. Let's see, on a more volatile market. There you go. Bitcoin. So how would that's the crazy Bitcoin rise to 20,000? Okay, that was 20,000. Look how you could have gotten out in a very good area here. You know why? All-time high, huge selling power. People are dumping here because the volume was insane. And how come the volume is so high and yet the price remains still in this area, but the volume is negative? It means dumping. You know, a lot of dumb people are buying. You know, so that's what you're seeing here. And then even if you want to buy the bounce, this here gives you kind of a good warning that it's about to reverse. You know, light green, darker green, solid green, and then it gets lighter here. Same thing. Look, the precision mode, like it says, is pretty precise. I really like this indicator. It gives you some solid signals in terms of volume, gives some good overall idea of what is happening. You know, it's basically one of the most successful things I use in my trading system. Okay, for instance, this last bounce here, which was like 10% or something, I remember because I traded a bit. No, I traded something like that. Yeah. So you see, I got in the confirmation. That's why I said 10%. Oh, but why didn't you get in, you know, on the very bottom? Because I'm a conservative guy. That's why. All right. And now I'm going to explain you why I got in there. First, remember I was talking about the convergence, divergence. Look how the price is going down, but the volume is going up. Remember, I was looking for that before. So, okay, that's what I was looking for. Okay. So, talking about that, we're going to go into the next area of the course, which are the reversal tools. The reversal tools, they offer you 4 different ways to spot reversal, strong change of directions in price. So since we're talking about volume, let's do volume method. Let's start from the volume method. The volume method, it's the most reactive one, and it's the one you want to use to know, you know, you need a trigger when it's really bearish, when it's really bullish. I don't really like it because it's too reactive, to be fair. But when you need a volume trigger, a volume confirmation, I use this combined with this. So for instance, you cannot trade this, but you can trade this. Let's say you got this falling and you're waiting for the bounce. So you see how there's a divergence going on. You don't know when to actually the confirmation. This is the confirmation. You see, same thing here. This happened way too late. You lost it. You're waiting for the bounce. You have the divergence, the convergence, and then you have this to confirm. So basically, the volume bearish and bullish convergence divergence. You know, it kind of tells you when this is happening for you. Since it's too reactive, I rather use it on smaller time frames. Everything that is more reactive, usually it's better in time frames. All right. Now let's talk about other methods. Let's start from the most conservative one, the RSI method. A lot of people tell me like, hey, but it's not working, I'm not seeing it. Because the RSI method, it's our most conservative one. You see how the volume method was like everywhere? Okay, the RSI method is completely different. Look, it appears here basically 2 times, and look what happened after. You can keep looking, let's keep looking. That's a 1 minute. So look, beautiful, beautiful signals. It's our most conservative signal in terms of reversal tools. There you go, another one. So far, 100% precise. Another one, 100% precise. The problem is that sometimes it is too conservative. So this is a daily view of the same chart. So basically, through all this time, you had one bearish at the very top here. All right, and you had you had a bullish here. We just had one. All right, and turns out that it actually went up quite a lot. So as you can see, the RSI method, it's probably one of my most favorite, I guess, because it's super conservative, and you know, sometimes I like to trade last but trade right. So if you're this kind of guy, you want to use the RSI method. The RSI method is basically telling you, you know, the price is going up, but our algorithm, you know, it's analyzing that the price spit is going down. So this is a divergence between data. Therefore, the price has to correct down. In the same way, the price is going down, but the speed's going up. So this is a divergence too, the price should correct. That's how this indicator works. So let's move forward to the next one, which is the scalp exhaust method. Really good, probably our most popular one. So what does it do? So the scalp exhaust method basically tells you where are the most, let's say, the areas where the trend are almost exhausted. Like you're running uphill and you're almost there, you're almost at the peak and you're losing strength, and you know, you're almost falling back up and reversing. So that's what the reversal exhaustion, you know, the scalper exhaustion area does for you. So basically, so you have this huge downhill, and here it triggers this area. It's where it's likely to reverse, and it does. Same thing again, it does. Same thing again, it does. A bit, but it does. Bad one, good one, awesome one. This one is rough. Why it's rough? Because you see, it's going down all the way down, and then it gets really exhausted because it's a huge fall. So basically, it means that it could reverse at any given time. All right, then it's up to you and your system to figure out what time is better. Okay, it's when the trend is losing momentum. That's what it does. So since we're talking about this area, right, this is a very chunky area, and we want to, you know, to try to guess where's the bottom and such. So let's keep this on and try to analyze and use our features to find the best area to get in and out, right? So I'll keep it moderate because, you know, moderate's just a little more reactive with the warnings on. I think that's one of the best ways. Now let's talk about probably our most impressive, most powerful feature, which is the Spectro clouds. The Spectro clouds use a really complex algorithm, but basically it not only tells you when the price is likely to reverse, but also it gives you the price where it should go next. It basically predicts the future. All right, so you always have three different ways of setting it, just like Spectro: aggressive, moderate, and conservative. So I'm gonna do conservative because, right, we're all conservative guys here. All right, so this is one, but I want to look at the past so you guys see it doing its job in the past, so you see how it works. Okay, so you see a couple one here. So basically what it does is this: like if you see expected cloud there, it should tell you that, hey, the price should go back here. Hey, the price should go back here. You see, let's see another one. Look, a green one. Hey, a very tiny one. The price should go back here. Since it's too conservative, let me do moderate. Perhaps we're gonna have more examples for you. Not really. Let me look in a smaller time frame so you guys. All right. Let's look for some. There you go. Got some for you. For instance, here. Huge Spectro cloud. It's after up movement. It means that you have this red bearish pressure area and the price is likely to come here. This is the first target. This is the first target, the safest target, the second target, and the latest target. Oops. You see all the edges, I consider them as areas where the price should go. Okay? For instance, another one here. You see how, let's study this move here. In this bar here, you already knew that the price would go back up in the future. In the same way that in this bar here, you already knew that the price would correct at least to this level here. Let's keep looking in the past until we see something. You see another one here. Let's look for another one. There you go, another one. So far, 100% precise. Oh, we gotta, just because I said it, fail. Oh, couple good ones there. See, got the price right. Here, let's do 15 minutes in aggressive settings to see if we get a different output. Aggressive. Let's look at the daily one with aggressive and see if it's gonna trigger. Oh, it actually did. So there you go. Look, first target, second target. Oops, actually it's quite opposite. Safest, moderate, and aggressive target. You see? And they all were right. This is what is going on. So basically, Spectro calls are telling you that you have a possibility of seeing a reversal up to this level in the future. You know? Which is good because this is a reversal that sometimes it means like, hey, you might want to hop back in. Personally, I wouldn't do it because we're in a huge downtrend, but you know, it's up to you. I like to play it safe. Let's see if we get another one here. No, we don't. Let's see, 4 hours. I just want to show off a little bit. Yeah, that's a weak one. There you go. Oh, that is another one here. Look, another one here. See, it's really precise. You know, basically, it's one of the indicators that I really like to follow. Look, it has an amazing precision for the future. Look, the ones we were looking at before, remember, the other time frame. Look, You see? So the Spectro calls, they basically do that. It's one extra indicator for you to take in consideration. All right? Probably it's one of the ones I like most, but they're not giving me yet what I want. You know, basically, you could have used the warning to get in, you know, because it happens within the area after the divergence in volume, but that's not enough. Let's keep looking what this indicator can give us. So X confirmations, this is the next feature I want to cover. So what is X confirmation? What is this weird name? So basically, when you're trading, you use other indicators to confirm your whatever, your analysis, your, you know. So X confirmations basically check all the mainstream indicators for you. Right now, you have here 3 different settings, and the conservative one check 20 indicators for you. Basically, RSI, stochastic, DMI, TSI, CCI, OBV, MFI, you name it. It will read all of those indicators for you, and when they all agree it's an oversold or overbought area, it will print in the chart, on the chart. I apologize. For instance, let's look back and we can see what we're talking about. For instance, of course, this is a huge bubble going on here. All the indicators are crazy. For instance, we're going to just add RSI here. Oh. RSI, stock. You see how here every single indicator pretty much was crazy. So this is something that you have to understand. Oh, but look how many bad signals. It's just, this is like batshit crazy, man. I'm sorry for the word, but like, how many times in your life did you see this? All right. So technically speaking, it was out of every single thing I've ever seen before. All right. But when things kind of went back to normal, you start to get really good signals. All right. And then when you have a drop like that, it also gives you the area where all those indicators agree that this is oversold. Oh, but here, you know, it's oversold and it's not showing up because it's the conservative ones. Maybe the RSI and the stochastics are, but perhaps some other thing is not. So basically, if we move to moderate, we might see it there. No, not yet. So let's do aggressive. Aggressive probably will show. Yeah, it's starting to show some here. Okay? I don't like to do aggressive because it's just too easy to trigger. Aggressive is good when you're scalping. Let me show you. Let's say 1 minute. I want to find the very bottom and the very, you know, what is the best area for me to get in. So still, you know, the aggressive one sometimes doesn't give you so much precision, but still you get the point. It reads you, you know, all of these indicators. And also this is a good point because you see, if you're using like normal indicators, like RSI and stochastics, all of them would be giving you false signals all the way down here, like this. Look. You know, so this is a good example sometimes that you need something a little more robust, because you see the aggressive version, there are pretty much like 5 or 7 normal indicators agreeing with each other that this is oversold area. Of course, cryptocurrency is a little out of the chart. So let's look at NASDAQ, right? NASDAQ's a little more normal. Let's do Amazon. Some good moves lately there. But this is still on aggressive mode. Yeah, not so bad. But still, see, it tells you kind of where the top is. But still, for me, it's just way too much. I like to go conservative most of times. Let's see what it looks like. Ah, much better. You see? very good areas. Also, we're talking about the clouds. Look how the clouds are precise. Look, every single time that they appeared here, their targets were fulfilled. All right, going to the, oh, let's go back to Bitcoin because we haven't yet found the very bottom of it. All right, I think it wasn't the asset, it was the future contracts. Let's go back to future contracts. All right, that was it. So now let's go to the other one, volatility tools. So far we only have one available, but this is proprietary. It's the best volatility indicator I think there is out there right now. Volatility is ignored so much, and yet it's the most important thing for a trader. Okay, why? Because you need volatility to profit. Oh, but this asset is volatile, it's bad. It means that you suck at trading. A good trader loves volatility because a lot of volatility means a lot of money, a lot of price change. You can buy something, here today and then the next day will be here. It's very hard to make money like this without volatility. Look, this market sucks. All right? So the alpha and omega volatility index let you know when the future stores a lot of volatility for you. Okay? In the future. That's something important to understand. It uses the same statistical concept. It compares the volatility that's going on and it tells you, hey, this is too much, you should correct to the other side. And as you can see, you get an omega here, and then you get a huge move. This is a little late, but still, huge move. And then you got an alpha here, and a good move. You see, now that we're becoming more and more conservative, I not only want to trade when there's a volume, divergence, convergence. It's in the exhaustion area. We have a warning, we have a bullish volatility warning, and we are coming off a very oversold area. It's correcting now, probably the indicators. They would be like something like they're in this crazy area here for very long, and now they're probably here, which is what's going on here. That's why they all turned off, because they're all oversold and now they're kind of going to normal. And also you have the Spectro clouds letting you know that, there's a big possibility of being a chunky move for you. So let's take a look at other things so you kind of can understand what we're talking about here. Tesla is something crazy. It's so volatile, it's so crazy that I honestly can't even use this Spectro here because they opens and they close there. Sometimes the gaps are so huge that you just get surprised. So here I'm gonna use something different. Okay, I'm gonna use the auto pivot levels, which is the next part. Okay, so the auto pivot levels basically tell you, hey, those are the levels that you should pay attention to. Those are the levels that set the odds. Let's start with full Fibonacci. Well, full Fibonacci basically tells you the range where all the moves are. So basically, you see this huge chunk here. This is where 90% of the move is happening. As you can see, if you look back, 90% of the move, 80, whatever, happens inside of it. Oh, but how do you trade this? Well, that's what you want to look for. You see? Those are the things you want. The things outside of the normal parameters. Look, here. This is a great trade. You got an X confirmation, you got an alpha, all right? You got a bullish momentum going on, you have a scalp exhaustion area, and you're outside of the normal range. If you're smart and you got in here, we're talking about a 20% trade. Let's be humble, right? 10% trade, not bad. Let's look at another example. Here, you got X confirmation, exhaustion area. You know, you have, look, once again, the beautiful Spectro clouds forecasting the price with extreme precision. So you paid attention at the clouds. You knew that if you got in here, you would sell around here. So that is a trade that gives you 88%. And then you can keep doing this as many times as you want. Look, another beautiful Spectro cloud here. Look, forecast the price in the future with extreme precision. Another one here, very beautiful. Look. So that's how I use full Fibonacci. Once again, look, outside of the channel, you get an alpha, you know, not so many indicators here. You don't get an exhaustion or an X-conf, but I mean, this is the settings we were using before. You can always tweak it. Right, so talking about tweaking, you can tweak it as basically you have infinite options here. So what you might want here to get some more confirmations here on this channel would be probably a reversal to RSI is too conservative, probably volume's too fast, but yeah, good enough. You see, look, outside of the parameter, you got a volume bull here, boom, volume bear, and volume bull. I would consider those because you see, talking about filtering, you got a volume bear, but within the range. You know, it's always better when you get a bearish signal within, you know, when the odds are in your favor. Okay, pretty much that's it in terms of full Fibonacci. Let's look at some other things. Let's Ethereum. All right. For instance, in this area here, we're coming from a downhill and we're right in the middle of the channel. So what does that mean? It means that at this point, the odds of going up or down basically are the same. You know, so what to do here next? That's what I would do in this situation. You know, let's look for something else. PETR4. All right, let's see this. Oh, that seems interesting. Oh, all right. So still right in the middle. I don't know if I would, you know, go here. Probably if it came somewhere near this level. Oh, this level here, you know, it's right there. You always want to find the best possible odds. Okay, so the full Fibonacci is a kind of a long-term thing. When we're talking about shorter term thing, I encourage you to use adaptive Fibonacci. Okay, why? Because it takes into consideration a closer time frame. Okay, so it tells you about data that is more close by. Okay, so for instance, in this case, it just breached the very last one, you know, with the X-conf, the oscillators all the way, you know, down there. So that might be actually a really good signal. You know what I mean? Do we have alpha? Yeah, we do. But it's not triggering. Well, it's something that I'd pay attention to, because we're talking about an upside of 6%, 10%, 15, 20%, 27. Those are your exits, your targets. Okay, I really like this one. It's probably one of the ones I use most. Let's look at some crazy volatile thing. Nano D. All right, that's pretty volatile. There you go. You know, once again, that's where you want, you know, to nail down here. Now it's already going up. We already kind of missed it. But as you can see, you nail somewhere, you can accumulate somewhere here, and then you got all of these targets to go. This is 6, 10, and there you go. Okay, so this is adaptive Fibonacci. Let's go to the next one, which is the BB Fibonacci. Hey, why do you like Fibonacci so much? That's a good question. Because Fibonacci is a pattern that is in everything. Basically, in nature, in space, you know, everything that you know obeys this rule. Alright, so why would this be different? Oh, but those are stocks. No, those were not stocks. Those are humans interacting with each other. Literally. People fail to remember that it's all about supply and demand in between people. It's basically people selling things to each other. It's no different than if you go to the market and people are selling potatoes. You know, if there's more supply or more demand, the price changes. So this is still around. I know there are a lot of bots and institutions, but still, this is a realm of human behavior at a certain extent. Okay, that's why I like Fibonacci, and it's a very resilient, powerful model. For instance, BB Fibonacci is the classic Bollinger Bands using the Fibonacci golden ratio. So when you have a price breaching the last level, it's when you might want to accumulate, as you can see here. Even though the price didn't change a lot, your upside was smaller than your downside. You're still profiting some. Let's look here. Great signal here. Let's study this trade here. So just considering this, why? Because it's right in the middle of the channel. I know there's an alpha, blah, 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 blah. Let's play it safe, right? So here it's like the best scenario ever. Why? You have an XConf, you have a Spectro cloud, you have an alpha, you have a volume bullish divergence going on, and also you have a warning. You have everything. Everything inside of the most bullish BB Fibonacci level. And what happens afterwards? A lot of profit, my friend. Oh, but when would I sell it? Well, conservatively speaking, at the very first warning or down signal you see. Why? Because the profit's too fat. You know, you don't want to risk it at this point. So if you got in here, you know, we're talking about more than 100%. You know, so I'm pretty sure that at this moment here, at the first bearish indicator that I had, which is basically the warning, I'll sell all of this here. And especially because you have a Spectre column saying that the price is going to go up to this level, and it did. So you see, this is the trade, the holy grail we're all looking for. All of the things agreeing on the same direction. Let's see if hopefully we can find another one of those. Those are really rare. You know, we were lucky that we found one. But this is what you want to look for. You know, this is what makes good trades. You know, you got to be patient, because when you're patient, that's when, you know, you find solid trades. So let's look at this. This is quite volatile. Not quite, but some. Yeah, no. See, like I said, it's hard to. You kind of have a good one here. No XConf, but still, but the Omega came kind of after, right? And you cannot short that stuff. But you get the point, right? So let's move forward to the next indicator, which is the Morris channel. Very nice. Very good to know where the odds are. Hey, how does it work? How does it work? It's pretty simple. Very close to the BB Fibonacci. They give you dynamic support and resistance levels. All right. So you can have all kinds of rules on how we're gonna use them. I really like, bounces, like 1, 2, get in, get out kind of situation. For instance, no on here. Oh, here. No. There you go. You have one here. What I'm talking about. Usually, you're waiting to trade the reversal of this downhill move, right? And then you get this first reversal here. Here's the thing. Kind of hard to tell that this is going to be such a huge move, So what I wait, it's the bounce. Oh man. The bounce that I'm talking about is this. Wow, one. What is going on? So we have a downhill here. What is going on? Okay, so you have a downhill move going on, and then you have this up thing, and then it bounces back up, and then it goes. This is where I trade. The bounce. Okay? So there's the first sign of resistance, of reversal, and that's when I want to get in again. When you have an up, with a volume bull, in the bullish channel, that's when the odds are in your favor. All right. Let's look at something else. Let's do Forex. Let's do USD JPI. Yeah, that's a good one. There you go. Very strong downhill. You're looking for like, okay, when should I get out of this? First, when it's a very strong downhill, I like to play it super safe. So RSI method all the way. We might not even get one. Yeah, we got one. Awesome. And there you go. You have it here, as you can see. So how does it work? First of all, any of those trades here, even if you took them, if you know how to trade correctly, you're likely to break even, because you would get in such a good price that once it starts to go up, if you played correctly, you should raise your stop loss. And here's another golden tip. Always adjust your stop loss to this level, or at least to a break-even level. So, it's very unlikely for you to lose. So you expose yourself to good luck. You see what I'm saying? You expose yourself to good luck. When you set yourself to play with the odds and respecting the risk management rules, you're likely to win big time. Because here's the thing. Okay, you have the XConf in the bullish channel. You enter at this price, and then it starts to go up. You get a warning. Great. At the warning, you already set a stop loss here. You're at profit, my friend. It's a small profit because this is Forex, but you're at profit. Actually, it's kind of good profit. And then when it breaks down, you're out at profit. Great. And then you have the same thing going on here. So let's say you get in here, it crosses back up. You could raise your first stop loss level here. Then you got an alpha. It crosses here. You set the next stop loss here. So basically, you got a good profit. Once again, it's not bad for Forex at all. And you can keep doing the same thing again and again and again. If you want to play safe, you don't have to buy, try to nail the bottom. You can always buy the confirmation. Like once it crosses here, I'll buy. For instance, it's going down, then, I'll buy here. That's another thing that you can do. For instance, when I have an RSI with an alpha, because they're both very conservative, I tend to get in. So it already crossed here. and then I get this RSI bull, I would go in. Like I'd just go. As you can see, it pays off. Same thing happens the other side. You get an alpha, you get an omega, with a lot of bearish signals, and then you get an RSI bear, you see a stronger move down. Let's see something else. For my British friends, let's see. Canadian dollar. Alright, same thing. Good. That's a zigzag channel. Look, great scalping areas. This is a very good indicator for people who are zigzagging. As you can see, it's very, very useful to give you the best areas to get in and out. I'm not a big fan of Murray's when we're talking about like a trading asset, but when we're talking about a very volatile, channeling asset, I really like it. I really like it a lot, especially when it breaks. Also if you're trading assets, you might wanna wait until it breaks this strong uphill here, and then you trade this much. But this is just about me. For instance, same thing here. It breaks here, you trade this much, and you would be stopped here. Remember, you always, every time it crosses a threshold, you increase your stop loss. Crosses, increase your stop loss. Crosses, increase your stop loss. That's the way you always take profits. For instance, here, once again, crosses, raise your stop loss. 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 You're stopped. See? Go up, crosses, raise your stop loss. Raise, 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 stopped. Same thing. Crosses down, stop loss, stop loss, stop loss, stop loss, stop loss, stop loss, stopped. Crosses, there you go. You see how you're always taking profits? That's the way I like to trade a lot. Okay? So now let me turn some stuff off because it's really overwhelming right now. You don't need so much information. Let's look at the trend analyzer. Good. So the trend analyzer is basically telling you where the trend is going. In this case, it's pretty obvious that at this point it was going up, and then here it starts going down. What does it do? Like, hey man, the forecast, this is a bearish moment. So if it's a bearish moment, the down moves, the bearish moves, they tend to be more successful and stronger, and more profitable than the up moves. Okay? It's as simple as that. It's as simple as that. And this is the Spectro price analyzer. So this look at what a great signal here. See, you get the omegas and the RSI, and then you have this nightmare going on here, and such a good signal. Okay, so going yeah, I hate when I miss good trades, right? You see that we're talking about green is bullish, red is bearish. What the heck is orange, right? So orange means a strong move ahead. You don't know if it's bearish or it's bullish, but whatever it is, what comes next is aggressive. As you can see, aggressive. As you can see, quite aggressive. As you can see, aggressive. So it means that your trend is going crazy. Whatever is happening there, let's look for another orange one. Whatever's coming, it's big. Yeah, as you can see, oh, there you go. Same concept here. You got some oranges, aggressive. Orange, aggressive. Orange, aggressive. Orange, yeah, that's kind of right? But that's what the orange means. It means like a huge instability. Okay? So now let's look at the other trend analyzers so you can understand the differences. The next one is based on volume. It's not based on price. So it has a little different behavior. As you can see, it's a lot more choppier. But, you know, if you're already using the volume analyzer, this could be overwhelming. Why did I add this? Because some people, they don't like the volume analyzer. You know, like there. Sometimes they just want something a little simpler. And this has a slightly different algorithm. So, you know, it kind of gives you some very good signals as well. For instance, every time that you see the choppiness like we're talking about, it kind of tells you like, hey, be careful, we might see a reversal. For instance, if you see here in this moment, there's a lot more green than here. You see that the red background starts to appear. Even though this starts to appear, the price holds. What does it mean? It means that when it's breaking, it's likely to go down. And that's what happens. And in the same way that the next part, you got a channel, but you have what? More green than red, right? So when it breaks, it's more likely to go up. What happens? Up. Wait for a channel here. Another channel here. Here, well, the RSI kind of give away, right? The omegas. But once again, you analyze what you have most here. In this case, kind of 50-50. I would say that it's hard to read this one. But since you have the other ones confirming, let's look for other channels. Here, this one is pretty 50-50 too, so hard to read. Remember, if it's hard to read, if you don't have a solid red, you know, if you don't have a good analysis, just look for the other one. Don't make the trade happen. You have to look for the trades. You know what I mean? It's like fishing. You cannot make the fish appear. They're just there. Let's look for channels so you understand what I'm talking about. Not many channels. Not many lateral channels here. Basically, that's not very lateral, right? Yeah. Okay, here. So you got this channel here. What do you have? More red than green, breaks down. Here, another channel. You have what? More green than red, breaks up. Another channel here, more red, breaks down. Another one here, more red, breaks down. You see? Same thing here. It's coming from the red, you have an RSI bull, and then here you start getting more green. So it breaks up. Same thing here, kind of a channel here, red, breaks down. Oh, this one is a fake one. You see, this is a fake signal, bad signal, but always happens. Nothing is perfect. So basically, this is what the volume analyzer for the trend analyzer does. It's a slightly different approach to volume, and I really like it, you know, depending on what I'm trading. Now the smart trend beta. Why beta? Because I used a bunch of functions that TradingView doesn't really parse well, and sometimes it behaves a little crazy, and I'm still testing, but it gives you some really clear signals of, you know, clear signals of what is going on. So there you go. For instance, all of this down here up to this moment, the trend analyzer told you like, hey, this is downtrend. Do not worry about that. In the same way here, it kind of gives you a poor signal, you know, and then you have like this is still obeying this downtrend here, and then you have this upside here. I mean, this sideways here. See, when it's sideways, there's really no trend. What you want to know is like when you have moves like this one. Why? Because you want to know when it's going to end. And this is where the smart trend is so nice. Look where this trend stopped. Here. Look. Here on this bar. You see? This is the bar. This is the bar that the trend stopped. So it means that from now on, the smart trend beta is trying to figure out if this trend is going to renew itself or if a reversal actually happened. At this point, it's not a reversal. At this point, it could be just a a correction. It could stop here and go down. But the smart trend told you, hey, this is the last time I can tell this is actually a downhill. So just saying, you might want to close your position if you're shorting, or if you're looking too long, you might want to get ready. So let's look at 5 minutes to see some other perspectives. Same thing here. There you go. The downtrend starts here, goes all the way down here, and then you say, hey buddy, you might wanna change your perspective. First of all, you already have this clouds that nailed it. Okay, so right here you already have everything you needed to profit. Same thing here. It's going up, 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 up. Here you know that the trend is gone and you might want to reverse. So let's look at something else. Ethereum, also pretty intense. Ethereum, Bitcoin. Let's make it even more. Okay, let's see what the trend analyzer gives us. There you go. You see how even after this long correction, it never really stopped being bullish up until here. And then it becomes bearish, and now it's bullish, So the smart trend is a very easy to read thing where if the trend is continuing, it will print like, hey, it's still an uptrend, it's more likely for it to go up. But if it stops printing, say, hey, the trend is stopped, I don't know where it's going, so be careful. Okay, let's look something else up. Let's look up the cumulative mode. The cumulative mode basically works in levels. Okay, so it's composed by 3 layers. Okay, one has long trend, the other one has price change in short term trend, and the other one has a little bit of volume and stuff like that. Okay, so as you can see here, you have more red, and you start to see the red is losing strength, and then you get green. Starts to go up, 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 correction. This is a correction. You see, it doesn't turn red. It's just a little weaker. Then go up, 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 and now you get a huge correction. That's when you should be afraid, because when the correction becomes too big, it becomes a reversal. So let's take a look at the other situations. So we can see actually a reversal going on. There you go. There you go. Okay, so we're going to study how this move became a complete reversal. So as you can see here, from this moment to this moment, there's a lot more green. That's the first thing you always have to see, when you're analyzing trends, especially the cumulative trend, is that an overall you have a bullish momentum going on. And then here, you still don't have a lot of dark reds, but you have some reds more than you had here. So this is a transitional phase. And then here you start getting all those dark reds. So it's likely that from now on, it's going to fall. Oh, but it's reversing. Sure, let's analyze that reversal. Look, once again, from here to here, you got a lot of reds. From here to there, you got like reds and dark greens. And from here to here, you have some strong greens. That's how you have to look the cumulative mode. Of course, this is 5 minutes. I like to use the cumulative version, you know, for longer trends. You see, for longer trends, it gives you a lot more insight. You know, it makes a lot more sense when you're looking this way. All right, and for last but not least, one of my favorites, which is the Ehlers mode. Ehlers is a guy who invented many of the indicators you are using, but you have no idea. So if you don't know who he is, just take a look. Ehlers, you might be surprised. So this is his algorithm for basically a MACD. What's a MACD? It's the convergence divergence between two moving averages. But this is a fancier moving average that takes in consideration price change and some other things, not the price itself per se, right? But some of its derivatives, all right? And as you can see, it gives you some really solid signals. For instance, look at this clear downtrend that goes all the way here without changing its color. In the same way, you get all of this beautiful uptrend here. You see? It's pretty precise. Let's see another thing that has been very confusing. Maybe this is quite volatile. There you go. So look at this trade, just to start with. Yeah, just saying. So look at these signals here. Look. You know, when you mix those signals with things such as alpha, you know, or RSI, oh, this is a bad one. Yes, it's a bad one, but you know, it happens. When you start mixing all of those things, for instance, look at this alpha, this omega here. You know, you got this omega, and then you have this compression going on with the down. Man, you know it. So what is this compression I'm talking about? The compression is when the cloud starts to get thinner. Every time there's a compression, like you see, like this, it means that there's a price change going on. See? Those compression areas. Okay, so basically that's what you want to look for when it comes down to the Ehlers moving average. You basically, well, if it's red, it's bearish, and then when you start to see compressions, you might want to pay attention. And that's about it. But look, such clear signs that you really don't need much else than this. Okay, with that, we basically cover every single feature that we have. I hope that answered most of your question, guys. I'll be doing this video again. I want to talk about every single indicator more in depth, but since this was a big release, there are many fixes that I want to do. For instance, the new algorithms such as the smart trend, the alpha omega, the volume method, the Spectro range method. You know, all of those things are things that I still want to tweak and change. So this is just a quick, not a quick because it's like 1 hour and a half, but it's something just for you to understand every single thing if you want to use them. But I really want to improve this tutorial in the future because right now, the thing is, this is fast. I could talk about every single feature for 1 hour alone, you know? So I hope you guys understand that I'm just trying to cover a little bit of everything and how to use those things together and how to explain about odds and, you know, how to actually, you know, understand that, oh, this is a great trade up and down. Yes, it is, but, you know, this is not. This is not. So if you know how to just trigger one or two things on, you know, you already see that some of them are better than the others. You know what I mean? Like, it really doesn't take that much to know, like, when you're screwing up or not. For instance, analyzing what we're saying here, like, oh, this up and this up. Yeah, but it never really crossed, you know? it never really crossed the, there's not one single candle that has opened and closed fully above the lower level. The first one that does is this one. You know, and it only takes you one indicator to make you avoid all of this nightmare. Of course, there's the other, you know, training analyzer telling you what's going on, but you know what I mean? It's just you have so many ways to make your trading a lot safer. Why do you want to risk it? With Spectro M2, you can really just trade the best trades there are. You can stop exposing yourself to risk. Look at this. Why do you wanna trade, you know, things that doesn't have alpha? Look at the alpha. Every time this thing appears, it's cash. You know, if it mixed with other stuff. Why you gonna short the thing like here, man? Why don't you short here? You know, you have all of those things helping you. Let's see something else. Gold. It's been a long time I didn't trade gold. Same thing again. Look, Omega in the overbought area. Down. Then you got an alpha down here. Up. X confirmation. Look, alpha down here. That's what you want to trade, my friends. Play it safe. Play it cool. Win always. Alright?